Morning, team. Welcome to Swing Trading Live. This is the live stream for you. If you are a swing trader or aspiring swing trader, you want to learn about top stocks, different strategies, way to profit from the market as a swing trader. That is everything we do here. So I'm so excited that you're here, or watching, those who are live or watching the recap. Anyways, let's jump in. As always, we start off by dissecting what the overall market is doing. The overall market being the S&P 500. When we look at the overall market, we get a good understanding of how the rest of the market will perform. And so again, when we look at the S&P 500, this is the futures of the S&P 500 because we get to see more of the aftermarket action. You can see here during the trading day, this is what happened yesterday on Tuesday. We had kind of this triangle type of action here. The reason why we like looking at the futures, though, is because instead of just getting what happened that day, we get a lot of aftermarket action. Because if we were watching SPY, it would have just cut off here and then we wouldn't see the rest. So again, we get to see a lot of the after action. And what it is it's very range bound, very choppy. It's staying in between these bottom ranges and these top ranges. So again, we're really missing out on a lot of potential here because of the fact that it's range bound. So again, we have these clear ranges and we want to break one of those ranges, right? If one of those ranges breaks, then we can see a clear breakout pattern either by trading short strategies or by trading long strategies. And so that's one of the options we have there. Anyways, before we get into the overall market, we have some trading videos I want to show you today. So let's just get into that right now. Hey guys, welcome back to video number 2 of this Growing a Small Account course. All right, so let's just jump right into it. So the course outline, as I discussed in video number 1, is the golden rules for growth, which is what we talked about in video number 1. Risk management, defining your system, starting with paper trading, going to live trading, and then increasing your size responsibly. And that was the setup for video number 1. Now we're going into video number 2, which is setups for exponential growth. What is the step-by-step system that we use here in the software world to profit? All right, so going into it, we're going to talk about our trend following system walkthrough. We're going to talk about it for swing trading, for options trading, and then I don't know why it's not there, but we're going to go through it for investing. All right, so let's cover that right now. I'm going to jump into trading view and we're going to get into it right here. All right, so this is the S&P 500 right here. This is the trending band indicator as you see on the software. And basically what this system is it's very simple. When the stock breaks above the green line, that is a buy indication. So when it breaks above here, then we know that it's time to buy the stock. And when we know it's time to buy the stock, we typically set a 3% stop loss depending on the stock. And so we buy here, 3% stop loss, and we hold until that stop loss is hit. So as the stock moves up, we continue to move our stop loss up. So for instance, let's say we bought here. Let's start out lines, right? So let's say we bought right here. Let's turn this green. Let's make this 3 so you can kind of see it. So we bought here, and let's do this again, but for stop loss. So let's say stop loss got placed right there. So here we go. We bought here, stop loss got placed here. As the stock moves up, we move our stop loss up. As the stock moves up, we move our stop loss up. Just like that. And so now, by the time the stock got to here, our stop loss is here, which means we're at our break even. So which means that even if the stock comes down, we're going to exit without losing money because we have reached our stop loss has hit the point where our stock entered the trade initially. And so as you can see here, it doesn't get too much higher. So our stop loss roughly stays here. As the stock gets higher and higher and higher, then our stop loss gets higher and higher and higher as well. And then we get higher and higher and higher. And then we slowly move this up. And again, ideally, you would probably have hit your stop loss around here, or if not in here. But yeah, you see, you can hit your stop loss here, but you bought here. So now you have made this much money. And it was a very simple process to follow. Let's see if I can get this in here. If I can measure, that was a 10% return over about 80 days, which is really good. That's better than what the market does in a year. So I would say as a success. So again, this is a simple example of how a swing trading setup works, or as you can also call it, an investing setup works here with the trend following system. And so basically what you do is you wait for a stock to become a great buy, aka it just broke above the green band. You set your stop loss, and you can either set a trailing stop, which will move up automatically for you, or every week or every other day you can come in and move your stop loss up on your stocks. So again, that is how it kind of works for swing trading. But when you're in an investing world, what is really cool about this indicator is it shows you the topmost and bottommost lines. So these yellow lines here show you where the overall resistance is, aka where the stock will tend to top out at, and it also shows you where the stock will tend to bottom out at. So this yellow line right here. And so the dip buying strategy with this system is that when the stock gets below this bottom yellow line and then breaks back above it, it turns into a buy. And so again, I was in this period with a lot of my students and myself where it broke back above this bottom yellow line. We bought all these stocks right here, and then they soared up, and we made like huge percentages, some stocks even doing over a 100% return, just because we knew where to buy the dip. And so this is exactly how investors can do it. They can use this system to know exactly where to buy the dip, and when they know where to buy the dip, then they'll be able to profit to the upside. All right, so that is how an investing and swing trading setup works. Now, it's going to work about the exact same way for a trend following, for an option system, but you're going to want to stick to the FANG stocks or something similar. You want to stick to stocks that have a lot of options liquidity. And so the FANG stocks are Facebook, Apple, Netflix, FAANG. Facebook, Apple, Amazon, Netflix, and Google. And so those are the FANG stocks. And so those are going to be stocks you want to stick to. So for instance, let's go to Facebook here. And Facebook, you'll see that when a stock breaks above, it tends to jump up high, right? And so we've had that example here, we've had that example here, we've had that example here. And so when a stock breaks above quickly after it closes above the green line, then we can see that it takes off. And so because of that, when it breaks above green initially, then we buy some calls, and those calls will increase in value just like we're buying a stock, right? So as you can see, if a stock is a buy, then we can place calls and typically make money to the upside. So again, that's how it kind of works for options, swing trading, and investing. We're just following this system, and that's what we use to profit. All right, guys, I hope that made sense, the kind of walkthrough of this system. And now we're going to get into the next part of the video training series, so please stay tuned. All right, guys, I hope you enjoyed video number 2 of growing a small account. If you didn't watch video number 1, please go check that out. Anyways, see you in the next video. Hey guys, so that was video number 2 of the growing a small account little series that I'm doing. There's going to be 3 parts. Again, we did part 1 yesterday, and the recording is up on YouTube. This is part 2, and then part 3 tomorrow. So anyways, that is the growing a small account, but let's get to the market breakdown here. We did a little bit of a breakdown this morning already before the training segment, but I wanted to do it again for all those who are now new and kind of coming in. So you can see here, this is the S&P 500 on a 5-minute chart, the futures, so we can see aftermarket data trading well. Anyways, what we see here is that the market is trending down. We have this like triangle breakout to the downside, and it's breaking below these lows, forming lower lows. So you can see here, if we just start connecting these lows, the lows keep getting lower and lower and lower. So obviously we are in a downtrend, and the downtrend is continuing to hold. So again, what we can expect is a push into this range here, the 3909 level on the futures, and then push into this level, hit this downtrend line, break this support, and just head down. Something that I would expect to happen in the first 15 minutes of the trading day. So when the market opens and we have those first 15-minute training, or the first 15-minute candle, then we'll probably expect a push up and then push down, and then probably a move down lower. But again, if we're looking at the news here for today, if we come here to Wednesday, September 7th, what we're going to see here is that we don't have much news. We have a couple of FOMC members speaks, then Bernard speaks, and then Beige Book, and then another member speaks. But nothing too important. Most of our news is coming in on Thursday with the Fed Chair Powell speaking, and we're going to get a lot of info from that: natural gas storage, crude inventories, crude oil and inventories, and then nothing much on Friday as well. So Thursday is going to be a heavy day when it comes to market news and volatility. So today we don't expect much outside influences on the market other than just the trend is holding the market down. So that's just a good understanding of that. From there, we can look at other markets as well. And so like if we're looking at QQQ, which is more of a tech focus, you can really see this trend. It's very prevalent here. SPY is holding a bit more because of the fact that it's all 11 sectors. The tech sector is just being hit hard, and since the tech sector makes up 25% of the S&P 500's weighted index, of course, the overall market is going to be going down. And so again, this is something to be watching here is the tech sector, or specifically NASDAQ or QQQ. If you want to look specifically at the tech sector, you go to XLK. You can see here we definitely charted it out before, but we have this consistent downtrending line, which is not good. Again, the reason being is because tech makes up 25% of SPY, right? And so again, if 25% of something is going the opposite direction that you want it to go, then it's going to slowly start to pull the rest of the market down. And so that's kind of the outlook we have here. So once XLK gets an uptrend, it's really going to assist and facilitate SPY moving further and higher and uptrend. So that's kind of what we're seeing there from that breakdown. But on SPY, our game plan here is very simply to see a break of this support again, to see it play into the resistance point right here, and then break down lower and have kind of this triangle formation break out to the downside, which it's already kind of doing here so far. And so that's what we're looking at on SPY, a breakdown lower. And if we're looking at our next support level, the next support will come into play around 380. So again, looking at a move for eventually maybe over this next week, again, that being today, Thursday, and Friday, a push down from where it is to maybe even around 380, 381, 382, somewhere in this level of the market dropping. Hopefully it can recover here and eventually head higher because, again, we don't like seeing these down moves. But the next question is, okay, if we're moving down, what are our options? And so that's supposed to be a pun. But basically, we can use options to make money on the way down. A couple ways is if you have a long-term investment portfolio and you're like, I'm not selling these stocks, you can do covered calls on that position. And a covered call on that position is quite simple. Let's say you're holding a stock and you you do a covered call position, which is you sell a call contract higher than this. Let's say the market is trading right here and you sell a call option for 123. What this means is you get to collect premium for selling an option. So let's say you collect $200 for selling this option and it expires in 2 weeks. So as it goes, you collect the whole $200, like you get to keep the whole 200 as long as the stock stays below this level. And so why is this good? Because it's almost guaranteed money when you're trading in a downtrending market, right? The market is continuing to downtrend. And so as long as it stays below this level, you collect the whole $200 for free. And so that can help you add income and build up a buffer as the market is dropping on your long-term portfolio. Now, again, a more quicker version or more of a trading approach would be to use put options. So put options trading breakouts to the downside. What do breakouts to the downside look like? We all know what breakouts to the upside looks like. The same thing, but instead of using a resistance, we're using a support. When a stock forms a support level, we wait for that to break down, and then we buy the puts and we trade the downside. You can see here is another example. We look for a support to form. We buy the breakthrough, and then we make puts down. Thankfully, with puts, they increase in value quite quickly, so we actually don't need to be in a position that long. So we don't need to see a huge move, just a decent move. A 1% move in the stock will lead to like a 50% return in the options. So again, just looking at that to help give you an understanding of trading individual options like puts and calls to make money on the downside. So those are some options, as well as inverse ETFs, which obviously go up in value as the market goes up, goes down. It's inversely related. So those are a couple options there. Anyways, that's about it for the market breakdown. Primarily because we went over the tech sector, we went over the S&P 500, and we won't really have much more until the opening bell, which is in about 15 minutes from now. the opening bell, and then what's going to be prevalent from there is the first 15 minutes. Expecting to hit into that resistance point or that downtrend line, and then break through support, and then head lower is kind of the guess here on SPY based on what we're seeing in the trend holding. So that's what we're watching, and that's kind of what we're expecting for the overall market. So that's about it from that. Now we do have another trading segment today. Again, this trading segment I'm actually excited to share because it's actually going to cover a lot. Like, this is something that I share in my private coaching program, but I wanted to share it with you guys because it's really helpful. If you've ever struggled on knowing where to buy or how to identify if a stock is a good stock, and then let's say, okay, cool. Now I know how to identify that. Where do I find them? So again, this video goes into identifying what makes a stock good and where to find them quickly. And so this is an amazing training. So stay tuned because you don't want to miss out on this. Lesson, we're going over how to identify and find killer stocks. How do we find stocks that trend well, and how do we know that they're good? This is what this whole thing is going over. So anyways, that's what we're going to be going over in this lesson. As always, I like to repeat the quote. I always say that you could publish trading rules in the newspaper and no one would follow them. The key is consistency and discipline. Almost anybody can make up a list of rules that are 80% as good as what we taught people. Remember, this is Richard Dennis saying this, the person who taught 14 people off the street and who ended up using these simple trend following rules to make over 100 million in less than 3 years. So you can easily come up with the rules that were 80% as good as what we taught people. What they can't do is give them the confidence to stick with those rules even when things are going bad. So remember, what we were teaching works. Make sure you follow it and stick with it even during the hard times. So what makes a stock good? What makes a stock a good trending stock? When we're looking at it, how do we know that, hey, this actually has potential, or no, we should avoid looking at this stock? First and most importantly, if we want to do a trend following strategy on a stock, we need to make sure that the stock trends well. So number one is a consistent and healthy uptrend. As we discussed in prior videos, that's going to be a slow stair-stepping pattern up over 5 years. You see a stock that has a natural healthy uptrend to the upside, not like a straight up line or anything like that. The stock that's been on the market for less than a year, nothing like that. A healthy, strong uptrend for over the last 5 years. That could include crashes. That's fine. We're looking at a healthy, strong uptrend. So again, you can do this a variety of ways as discussed in the trend analysis section of this module, but you can look at that there. Next, you want to have a clean and clear moving trend, no choppiness. You want solid direction. What does this mean? Well, some stocks are very choppy, as they go up and down, up and down, up and down, up and down. An example of this is, especially on SPY, is these examples right here. When as it's going up, it's up, down, up, down, up, down, up, down, up, down. If you see a whole stock that's always up, down, up, down, up, down, up, down, up, down, and then when it goes down, it's up, down, 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 you don't want a stock like that. Why? Because it's probably going to hit your stop loss more than not. It's going to confuse you, and it's going to cause you more emotions and anxiety. Why? Because as it's trending up, you're going to see your portfolio drop, go up, drop, go up, drop, go up, drop, drop, drop. Again, the most precise trades and the easiest trades to be in is stocks that trend and move very well in one direction. When they drop, they tend to go straight down quickly. When they go up, they tend to go up, down, up, down, up, down. It's very clear direction. It's not up, 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 down, up, up. It's not that crazy direction. It's a very straight and smooth line. So next is a history of performing well with trend following. So again, we want to use the strategy that we're using and go back a few times and be like, hey, how is this actually doing? How is this stock performing? Like, has this stock performed well with trend following in the past? And you can very easily do that with your eye test. So you go on here and you use the trend following thing. Okay, it broke above here last time. Okay, look, and it did well. It broke above here with some choppiness, but my stop loss would have held me safe. Here, it would have gone up. Here, it would have gone up. Okay, so in general, this looks like it works. Now, again, for a mathematical proof, again, you have 2 months of free access to this software. You can go on to it and analyze any stock. And again, based on the exact system I'm teaching you, this TDBS system with the trending band indicator, you can actually see how well it's performed in the past. I believe it's under yearly return. No, it's under accuracy. Here you can see all the past trades it has done based on the trending band indicators. You can see more times than not we're green, and our wins usually way outdo our losses by a good portion. So what does this mean? It means this is a great stock to trend trade. If you are looking at the historical performance of a stock that you want to trade, and it's more red than green, or the red highly outweighs its wins, then that's the stock you want to stay away from, right? We want to find stocks that are consistent and will grow when we buy it. We have a chance of actually making money. So that's kind of what that's going with. I saw this. So next is a good risk to reward setup. So again, a risk to reward setup is how much money are you risking versus how much you stand to make. You want to have at least a 1-3 risk to reward or better. Based on your current setup and the entry requirement, you want to be able to risk $1 with the chance of making $3, or risk 1% with the chance of making 3%. If you have odds like that in your favor or better, being a higher end number, so 1 to 3, 1 to 4, 1 to 5, those are going to be the trades that work out best. So now in general, before I start showing you how to find stocks, this is what makes a good stock. In general, you want to avoid stocks that are IPO stocks that have less than a year of charting data. Why is this? Well, because as swing traders, as trend followers, all we can do is put all the odds in our favor. And in order to put all the odds in our favor, we need to know, how does a stock trend? What previous levels does it have? How does it perform in certain markets and stuff like that? We need all that historical data to make an educated trading decision and an investment decision. And so again, if it's just now on the market, it just opened, or it's been on the market less than a year, we don't have enough data to make a conclusive decision about if it's a good trade or not. So make sure that it's not an IPO stock. It's been on the market for at least 1 year. Penny stocks. Penny stocks are super volatile, and again, they shouldn't even be in your list of good stocks. Why? Because it will not pass the eye test. It will not pass a healthy uptrend over 5 years. Most penny stocks are consistently trending down until someone decides to pump it up, and then it takes off, and then it goes back down to downtrending. So again, away from penny stocks. Away from hype stocks. Why? Guess what? Trend following will get you into stocks before the hype stocks happen. I guarantee it. 2 brilliant examples. And again, this is proven. You can go on my Instagram, and there are so many people who have followed the alerts that I sent when I sent this out. But Plug and Workhorse identified they broke above the trending band indicator. I got notified of those stocks. They were around $3 and $4. They weren't penny stocks. They were just very cheaply priced stocks. They broke above the trend. It showed good momentum. I alerted it on my Instagram, I alerted it to my users, and it ended up going over 100%. After it went up about 20%, then it started getting hype, and then the hype fueled it and pushed the trend higher. So again, you should not be getting in and following these hype stocks. If you follow this consistent strategy, this consistent system, I guarantee you will find great stocks and be able to consistently make money, and sometimes you'll even be able to get in the hype stocks before everyone else. So that is the goal, to get in before everyone else, because your goal is to follow the trend, not to follow the hype. Now, there are different methods to finding stocks. One is screeners. The next is sector analysis, which has a few more parts, which is heat map and ETF holdings. And the next is similar stocks. So again, let's go into screeners first. So when I'm looking at screeners, I'm going to be using the Impeccable Stock software, because this is the software one that I built. So again, I'm biased on it. But also, it is built for trend following. So the screener has filters that other screeners don't have to specifically help trend followers. So again, when I come here, recommendation of a great buy means that the stock just broke above this top band recently, which makes it a great breakout buy. So that's ideally what we're looking for. So a great buy, you can avoid the rest. Again, now, like I said, what do we want? What are we looking for? What is the criteria of a good stock? A healthy, consistent uptrend. Okay, check one, a healthy, consistent uptrend. So trend, uptrend, check, done. What is my next criteria for a great stock? It is a clear and solid moving trend. Oops, sorry. We'll get to that in a second. A clear and solid moving trend. So again, trend description, trends well, at least it trends well, right? I'm going to eliminate this because we don't really need that at the moment. Let's see, how many stocks are we at? We're at 18. Okay. Next is we want a history of performing well with trend following. So again, let's see. We have concluded how well each stock has performed, and we do it right here, the yearly return from. This has shown, based on the TDBS system and the trending band indicator, how much has this stock made, or does it make on average yearly. So again, I want to make at least a 10% return every single year. Your return you want to shoot for should obviously be above 8%. Why is that? Well, because if you put your money in the overall S&P 500, you'll make 8% a year. So again, we want to make over that. So 10 to 15%, something like that. I typically set the low at 10%, and then I kind of filter by that later, which I'll show you here in a second. So we matched criteria 1, criteria 2, criteria 3. Next is a good risk to reward setup, a 1 to 3 risk to reward setup or better. So again, we come over here, risk to reward right here. Let's go 1 to 2. We could go 1 to 4. We like 1 to 4. Let's see how many stocks we get. We got 3 stocks. Here we go. 3 stocks right here. We found 3 great, amazing stocks that match this criteria right now with an average yearly return of 11.65%, 15.28%, 17.64%. So again, we find that, and then guess what? We just go into these stocks, and then we look at them ourselves, and we get a good understanding of how these stocks perform and how they are doing. So this is a great way of finding stocks as a screener, is being able to plug in exactly what you want. And again, you'll be able to adjust around and play with these numbers to see what you like best and kind of go on from there. But this is a great way to quickly identify stocks. So again, using a screener is very crucial. Here's an amazing stock that was on the screener. Great buy right above the green band. You can see here it trends well. It makes about a 17% return a year, which is going to be double your average market return. And not only that, you now know how this works and why, and you can actually do it for yourself. So again, as I recommend, as I'm showing you methods to find stocks, especially with the Impeccable Stock software, I will give you a 50% discount on the yearly if you decide to upgrade by the end. Like if you decide to continue, say, hey, I want to continue using this software, I will give you a discount for being a coaching client. But if you don't, no harm, no foul, I do recommend you go through this software, use this software. It's so important, so crucial, and so vital. It will help you out. And take note of these stocks. Create a watch list on your brokerage. You can go and make a watch list and say watch list of amazing trending stocks, and then plug RRC in there so that it may not be a good one now, but you may be able to watch it for later in the future. Use these resources to build your watch list, and then every single Sunday or Monday or whatever, you'll just go through those stocks real quick, see if there's potential in any of those great trending stocks, and if there's not, okay, no harm, no foul. You'll recheck it next week. If so, you now have these great stocks that you no longer have to search for because you built a comprehensive list. So that's what you should be doing this week and moving forward. Use screeners, use the other methods I'm about to discuss, and create a watch list of amazing trending stocks. Anyways, moving forward, so that is a screener. Again, there are a ton of free screeners as well, but again, the best one for trend following will be the Impeccable Stock software, because it has things built specifically for trend following, especially this method that I'm teaching. Next is sector analysis. This is very important. So this goes under sector rotation. If you want to find the sector rotation chart, literally just go on Google, type in sector rotation. You'll get this image right here. Sector rotation is very simple. I want the full image. Yeah, I know it outperforms. Okay. Anyways, let's just go here. So basically, sector rotation means that in different market environments, different sectors perform well. And again, this is just economics. So when we look at it, when the overall market is in a bull market, technology sector does well, industrials does well, basic materials does well. At a market top, basic materials does well, energy does well, and staples go well. So how do we know to identify these levels? Where we go to the S&P 500, which we use as stock symbol SPY. We go to our trending band indicator. First off, I'm going to take off these. It's going to make it a bit larger. And then dev high and dev low are not shown right now. Show standard deviation high and low. Okay. Now we know our market tops, right? We know our market tops. We know our market bottoms. We know our trend. If it is above this green line, it's trending up. If it's hitting close to this yellow line, we're at a market top. If it's hitting this yellow bottom line, and we're at a market bottom. So now you use the S&P 500 with the trending band, which you can plug into your account for free, and identify what type of market we're in. Once you identify what type of market we're in, then you can look at, okay, what sectors perform well right now, use those sectors, and then I'll show you the next step. So once we identify the best sectors performing right now based on the overall market trend, then what we can do is we can actually go into, I'm going to show you 2 ways. One is this software. So again, as a coaching client, it kind of puts the coaching portal here instead of toolbox. But if you change the URL to tool-box, You'll get this. So after I think back on stocksoftware.com/tool-box, you'll get toolbox, and you go to research overload. Here you can see the different sectors of the market and see their ratings and how they're doing. For instance, in the current market, you can see there are five sectors that are trending up, 5 that are neutral, and 2 that are selling. So again, that shows why the market is quite neutral, because again, the more green, the more up; the more neutral, the more neutral; the more red, the more overall red of the market. But anyways, so once we identify what sectors are performing well right now, we can go into the Impeccable Stock software, find those sectors. Let's say the energy is doing well right now, and then we can go, okay, so energy is doing well right now. We're in a hot market for that. What are the top stocks in this sector? Okay, we have XOM. Which makes up 23.2% of this sector ETF holdings. So we have XOM, we have CVX, OXY, KOP. These show the top 10 holdings for this ETF and for this sector. So now you easily know, okay, cool, we know what market cycle we're in. Based on that, we know the top sectors in this. Based on that, we know the top stocks in that sector. The top stocks in these sectors are going to be the ones that are going to perform the best and perform well. So now you look through all these stocks and find one that is potentially has a great setup. That's another way to find amazing stocks. So again, that's kind of how you do it. Another way, instead of going to the Impeccable Stock software, is to identify the sector, then type in online stock market heat map. You'll find Finviz here has a heat map, and then you'll go into the sector. So for instance, let's say technology was the best sector at the moment. We're going to look inside the whole technology sector. We're going to find the strongest stocks, aka the stocks that are most green. We're going to go into that, and we're going to research those stocks, because again, when we are working in the right market, working in the right sector of that market, and in the hottest stocks of the best sectors right now, those are going to be the best stocks. Those stocks will trend easy. Those stocks will take off. Those stocks will do well, because everything is in their favor to do well. And that is how you find amazing trending stocks. So that is kind of the whole process behind sector analysis. Outside of that, once you have found stocks using screeners, sector analysis, heat map, ETF holdings, which is what I just showed you, then you also have the similar stocks method, which is on here on the software. So for instance, let's say RRC, right? We liked that stock. RRC Range Resources. So this was a good stock. Now you can scroll down, and the software has similar stocks, because of we have a database of stocks, and we know everything about every stock from a trending perspective. The software matches stocks that match it based on the recommendation, what it currently is trading at, the price point it's at, and the trend, how well or how similar the trend is to this one. And so again, now guess what? You have 6 new stocks you can now look at based on one that you previously liked. So again, you can use stocks that, oh wow, I liked this stock. Awesome. Since I like this stock, let's find other stocks that work like it. And that's what similar stocks are. So that's kind of how that works. Anyways, guys, this is how to identify and find killer stocks. Make sure you understand the criteria of what makes a good stock, and look for this in stocks. Know what stocks to avoid, and also know methods to find stocks. All right, guys, I hope that helps. See you in the next lesson. Okay, guys, I hope you enjoyed that training video over how to identify what makes a stock a good stock, and then how to actually find those stocks. There's a ton of different methods. Now, again, the market is doing not much right now. You can see here, this is SPY. The market has just opened. We are now 3 minutes into open. So if we zoom into more of a 1 minute chart, we can kind of see the open here. So this is 1 minute chart. So you can see here, the market just opened. It opened roughly at where it closed yesterday. So again, not too much of a gap to worry about. But again, like I said, what we're going to be targeting is most likely this low here at 389 or 388. So the reason why we're targeting these levels is because we're being held down by a solid resistance line that's really just holding this down. And if we zoom out further, you can see here, if we transfer to a 5 minute chart, you can see how we're just being held down by these. No, I don't want to place a trade. Panel or this downtrend. And so this downtrend is holding, which means that we're going to continue down, which means our lows are going to continue to get lower and our highs are going to continue to get higher. So the idea is that it's forming a triangle breakout pattern right here. And so this is kind of going to show either we break down here and we break this level and we head lower, or we break up, hit this, and then come down. Those are my 2 main ideas. Now, again, we could break above this and then break above this and keep trending up. That is an option, but probably not not highly likely due to this prevalent downtrend that we're in. And there's no major news to kind of help it either way. So that's what we're looking at kind of for our different levels, is breaking about this and then hitting this, or just breaking down right now. And so again, we'll be watching that and hopefully see that very soon in the overall market. We're looking at what's happening with the tech sector here. Tech sector is actually trying to push up. It gapped up. Now, the only issue we have here with the tech sector is this gap up. When you have gap ups in the market, they tend to want to fill. And so again, 90% of the time gaps will fill. And so again, it's going to eventually come down to fill this little gap and then head higher. So that's something that we're looking at as well, as it says it's getting rejected here at the 132 level. So again, just watching that. But overall, SPY is what our main goal is. You can see here, this trend line is what's going to hold the market down. If it breaks above, then we're going to retarget this level at around 395. So again, this is our kind of like game plan for the day. You know how you have to have a game plan where you have a bullish game plan, a bearish game plan, and a neutral game plan. Well, this is kind of our game plan. So bearish is a break below this right now. Neutral is break above this, hit this, and then kind of stay neutral in this level. And then bullish is breaking above this level. You can see here that we're starting to break above this little resistance line. So we'll see how that goes. And if it holds, it's kind of a weak candle right now, and now it's pushing strong. So looks like we have a break above this trend line right here, which means we're targeting this. So a game plan for anybody who wants to buy in would be buying call options with the stop loss around 390 and a take profit around 395. That would be an alert that you could follow. Again, do your own research first before buying, as again, I'm not a registered financial advisor. Let's throw this up there real quick. So yeah, that's a game plan to buy calls to trade up to 395 or trade up to 393, 394. As you can see, we have a resistance here. But anyways, that's one game plan for SPY. But again, it's only been 6 minutes of market open, so we don't know too much. Again, after the first 15 minutes, we'll know more because of the opening range breakout, where wherever the market tends to be in the first 15 minutes, it will follow that for the rest of the day. So let's see. If you who are watching have any questions, as in any market breakdown questions or any stocks that you want broken down, feel free to put that stock or that question in the comment section. I do monitor that and would love to answer that for you. Yeah, but as you can see, no major market news today. Thursday is when all this news comes in. Fed Chair Powell speaks to the natural gas storage or crude oil inventories. Today, we just had the FOMC members speaking. One speaking in roughly 14 minutes. No, it's off 24 minutes. And then another speaking around 11:35. So in about 3 hours. Top stocks for today are LRN, TWR, RWN, BTAL Play, and DG. So again, these show the stocks were with the most potential for today. Again, great buy trend score 89. Oh no, where'd the chart go? I'll look into that here in a second. So again, we have DG here. Let's see. Again, looking for the breakout above 260. Yeah. Pre-market down, but I mean, it's already, market should be open right now. Yeah. Anyways, let me go to that before we forget. Okay. Anyways, so yeah, this is just like I said, the game plan for the market is what we're watching. We broke above this downtrend line, which means they were being put in an intermediate uptrend or a short-term uptrend. Most likely going to target this level here of 395, 396. Hit this level and get rejected. So this is kind of the game plan for the day. Hit and then trade range bound. Again, if we break above this, that's a bullish sign, and we'll continue higher. But you can see here how we're up so far. Again, not too bad, 0.18%. Again, in options territory, you can multiply that by 100. So again, probably up about 18% on call options so far. So yeah, that's an outlook there. Nothing too much to cover though, because again, that is our game plan for the day is just to look for the hit above 360 and then range bound in between 390 and 395. Trade that little range, and then form a breakout pattern for tomorrow. So that's kind of the game plan we're looking for because we broke above. And now if we broke down, we'd be looking more for a downtrend. And then if we break above this trend line, then we'll look to target around the 401 level. Again, not all in one day. I don't expect that to happen in one day and should not happen in one day. That's not a healthy move to go from here to there in one day, just because that's a little too much. Let's see. Yeah, 2.5, 2.6% is going to be a very strong move and something I'm not expecting right now just because we don't have any news or economic data in the background to support that move. Anyways, that's the game plan. So if you're trading SPY, trading the call options, like I kind of alerted this morning, that is your game plan. You can move your stop loss up and slowly start to take profit. That's kind of the game plan. Anyways, guys, thank you so much for watching. This is the market breakdown. This is Swing Trading Live, where we give strategies, top stocks, and more on a daily basis. So if you want to join me tomorrow at 8 a.m. Central Standard Time, feel free to do so. But also, don't forget, if you want to get my custom watch list of the stocks that I trade on a weekly and monthly basis, the link below for that, I will send you my watch list. Also, if you want to get my free screeners to help you find amazing stocks, you can click that link below as well. Anyways, guys, enjoy the rest of your day. I will see you tomorrow at 8 a.m. Central Standard